Hello everyone, welcome to my channel. Don't forget to like, comment, and subscribe. What will happen to my term insurance if I am in coma? A coma is a long unconsciousness because of insufficient functioning of the brain. In this, the body of an affected individual fails to respond to any external stimuli. This unresponsive phase can be caused by a traumatic shock to the head, deprivation of oxygen from drowning or choking, contact with toxins, severe infection, or an increase in blood sugar levels. Okay, what are critical illness policies? Critical illness are additional riders that come along with term insurance plans, which are specifically designed for protection from life-threatening disease and illness. These ailments involve long-term treatments, multiple visits to the hospital, consultation prices, prescription pills, and others. They can add an extreme financial burden on an individual who is going through such a circumstance. However, a critical illness add-on rider helps by paying the expenses in lump sum for all the above described expenditures. Does term insurance policy covers coma? Yes, a term insurance plan covers coma along when a critical illness rider is purchased along with a base plan. Generally, insurers or banks have their critical illness categories with their respective TNCs, so it is somewhat common to find differences across such plans. Critical illness riders cover treatment for certain ailments that are life-threatening such as heart attack, stroke, cancer, coma, and AIDS, and etc. Key features of critical illness rider with term insurance plan in case of coma. There are several benefits of adding a critical illness rider benefit. A few of them are mentioned below. The first is, it pays a lump sum amount of life cover. Number 2, premium amount remains same throughout the policy term, which means that the premium rate doesn't increase once you get diagnosed with coma. And then number 3, this plan is applicable within and outside India, all TNCs applied. Number 4, get tax benefits US ATT of the IT Act 1961. And then provides you a large coverage that can take care of your medical and daily expenses. Okay, how do you receive the critical illness benefit in case of coma? With most of the term plans, you have the flexibility to choose how you want to receive the death benefit or right benefit amount. As explained, the critical illness benefit will be paid if one goes through state critical illness such as coma listed on the plan documents. You get the full benefit amount for the critical illnesses covered, and the benefit amount payable is equivalent to the critical illness coverage that you have chosen at the policy commencement. Various plans may also waive off the future premium if the policyholder is permanently disabled or goes into coma. This is because in such cases, you may lose your stable income source and may not be able to pay future amounts of premiums. Generally, 3 points are provided to receive critical illness benefit. The first is you can choose to get the benefit payout in a one-time lump sum payment. And then number 2, you can select to receive the benefit amount as regular income. And then the last one, number 3, you can also choose to receive the payout as a combination of both regular income and lump sum payment. Okay, Term insurance plans aim to provide overall protection to you and your family members in case of an unfortunate event. However, to rescue yourself against accident and illnesses that might lead to coma, you have to option for add-ons rider benefits by paying some additional premium amount over and above the base amount of premium required for the term plans. Thanks for watching, see you to the next video, and bye bye! Hello everyone, welcome to my channel. Don't forget to like, comment, and subscribe. How to choose an insurance plan for child. The biggest aim of any parent is to provide their child with a hassle-free and financially secure future. For this, they do every possible type of planning like investment and saving. One of the good ways to provide your child with a financially secure future is by buying a child insurance plan. Most insurance companies offer pure endowment and market-linked products under the child plans. If you are the one who is willing to invest in both equity and debt funds, ULIPs are considered the best option for children's insurance plans. If getting a lump sum amount at the time of maturity, opting for an endowment policy is recommended. Here are a few more suggestions that you can consider before opting for a child insurance plan. Step to choose an insurance plan for child. Here are key suggestions that you can keep in mind while you are searching for a child insurance plan. The first is plan in advance. It is recommended to start investing in a child insurance plan as soon as they arrive. The maturity benefits of most child plans start giving payout of various life stages of your child. Moreover, child plans give you a long horizon for investment. You can accumulate a good amount. Number 2. Estimate inflation. Since we buy a child and plan to build a corpus for the future of our child, so it is suggested to consider inflation as well. As a parent, you must understand that the money you invest today will have to be used by your child in the future. So, you must invest in a way that inflation doesn't affect much the amount you built for your child. Doing this will enable you to invest wisely and accumulate a good corpus. It is also important to understand the time frames when you want to get the returns. Number 3. Option of customization. The needs of a child grow as he or she grows. Therefore, you should check the customization option for your child insurance policy. For example, you must go with a policy that provides you some amount at different life stages of your child. Provision and conditions for partial withdrawals, way to increase the sum assured, and policy terms as per the requirements of your child. And then, number 4, choose a useful rider. Rider benefits or add-ons are the additional coverage that you can add to your best insurance plan to enhance its coverage. One of the most recommended riders for child plans is the waiver of premium rider. You must select this rider if your child's plan doesn't include it by default. Since this rider waives off all the future premiums in case of any unforeseen circumstances, it is very useful. Generally, child insurance plans provide a waiver of premium as the default option. If your plan doesn't, you must select it as a rider. Number 5. Your expectation from premium amount and tenure. It is essential to start planning for the future of your child as soon as he or she arrives. If you start planning early, you will be a step forward for the needs of your child. It is recommended to invest in an insurance plan through which you get your requirement returns. However, you must keep the premium amount also in mind as depend on the sum assured selected by you. The term of the policy should also be kept in mind as it decides when you want money for your child. And then, premium payment mode. As we have mentioned that the amount of premium depends on the maturity amount or sum assured selected by you. So, it is recommended to calculate the amount you will need at the end of your child plan so that you can invest accordingly. It is also required to be aware of the different premium paying method available for your plan. You will get to know about the premium paying frequency, whether it is of 1 year, half yearly, quarterly, etc. Thanks for watching. See you to the next video and bye bye.